Good morning. This is Dylan Jovanet with Behind the Market. Happy Thursday. Today's Thursday, August 20th. How does the stock market do during midterm season? I have been asked that question a dozen times in the past, 2 weeks. So I finally figured I'd just sit down and do some research and actually answer this question. And the funny thing about getting older is I used to know this, but you forget things when you get older. You forget things that you used to know. That is crazy to me as I'm experiencing that. Anyway, some facts for you. How does the market do during the midterm election cycles? Well, since 1990, the S&P 500 has dropped at least 7% from August to October in every midterm year except 2006. So basically, the general consensus is that markets drop during the midterms. That is basically what happens most of the time except one, since 1990. We'll call it the modern era. So basically, markets tend to drop from August to October. And what does that tell you? And it's interesting, it says except 2006, because 2006 was an interesting year. But, basically markets tend to drop during midterms. And just to emphasize that point, institutional investors have been dumping U.S. stocks, especially tech stocks. Last week, Goldman Sachs reported that we saw the largest weekly sales on record. We got hedge funds, asset managers, and other institutional investors sold, $21.6 billion of NASDAQ futures during the week that ended, which was the largest weekly sale on record, surprisingly. And what's very interesting, and this is where it gets a little tricky, and this is why you got to be careful of these kinds of statistics. Short sales have dominated the move. Basically, they're accounting for 72% of total sales. Now, why is that? Why do you have to be suspicious about that? Because we've had a lot of companies go public. You think SpaceX, right? Now, everybody's saying, you got to watch out for the lockup period. You got to watch out for the lockup period. That's when all the insiders will be able to sell. That's not true. Well, it is true. It's half true. What happens is investment banks, what they'll do is they will start to short the stock for employees who want to sell. So you don't even need the lockup period. Banks are just going to short the stock and get the delivery when the lockup period happens. But what that does is it allows the employee who wants to sell to capture that higher SpaceX price. So SpaceX was at 200, the bank's going to short it for the employee. Employee says, you know what, I own 100,000 shares. I want to sell 50,000 shares of those. The bank's going to say, okay, we'll short those for you. They short them all, 200 all of a sudden. By the time the lockup comes and is expired, the person sells, the stock's at 130, boom. That person doesn't sell at 130. They got the 200. They just give the bank the 50,000 shares to cover the bank short, and they get that short. So, it's a little bit distorted. But look, the bigger point is this. Tech stocks are being sold off. You're seeing a lot of large sell-off happen. And again, remember, for the midterms are particularly difficult times in the market. It really is a split screen, especially when you consider higher rising interest rates, which are, very, very concerning for us. Remember, the S&P 500 has dropped at least 7% from August to October. So what does this mean for you? Well, for me, what it means is, I've started to think about, okay, which one of the weaker positions do I have? Or stocks that have just gone crazy high but don't really have earnings. You take flyers on things from time to time. Actually, I don't really do that often. But I have a few stocks in my portfolio that are just, they just make me a little uncomfortable. I'm not that happy with them, So I'm going to trim those personally. The second thing it really makes me think about, which I want to share with you, is it's a reminder to only take good swings. You don't have to chase everything. Because remember, while markets crash, go down during midterm, 7%, we are in the middle of kind of an industrial revolution. This AI revolution is actually a very real thing, and it's happening. And it's creating immense amounts of wealth. And it's very rare when you have that kind of crazy going on. It's very interesting juxtaposition. So the second thing is, I'm thinking to myself, I'm only going to take good swings, which I tend to do anyway, but I'm sharing that mostly for you. You don't have to say yes to everything. And that's really what I want to say to you. Remember something. No is an investment decision too. You can say no, that is making an investment decision. The investment decision happens to be no. But, that is making an investment decision. Very, very important to understand that. And I think the best investors say no 99% of the time. So, say no, only take the best swings. And you know what? If you want to trim some of your weaker positions, it's times like this that might be a good time to do it. Hopefully, if the market does crack 7 to 10%, we'll be able to take that cash we used to trim and pick up some cheap things. Anyway, that's all I have for you today. Have a wonderful day. I'll see you tomorrow.